We have about maybe 50-something% of our supply base out of Vietnam. We have been aggressively and strategically and proactively diversifying. And being a multi-region supplier, we're never really overly investing on any, right? It's a very demand pull kind of game, and we're constantly advocating a multi-region strategy. Vietnam will continue to be big, but Vietnam is clearly saturated and the pricing is inflationary, and they are running short of workers who wants to work in the region. So, which is why I mentioned earlier, we are sort of increasing our presence in South Asia, Bangladesh, India, Sri Lanka. We have built up a leadership team in Indonesia, constantly providing the brands a multi-region supply base.
As you do this redistribution, if you will, how much will this bring Vietnam down? Are you able to share kind of how big the pie would be and split up between Southeast Asia?
We do not have an absolute target for now, but we're definitely trying to diversify the risk. You can see it going down significantly. I don't have any statistics today, but Indonesia clearly is stepping in, especially when there's clarity in the tariff. It becomes easier for us to deploy and easier for brands to decide. And South Asia has always been strong as a government in providing base. So while we don't have a specific number, but we definitely have to diversify.
Do you guys have any clarity, or you heard anything? Because everybody wants to know more about the transshipment clause for Vietnam. Do you guys know anything more?
No, there's no detail, to be honest, because the question about transshipment is, are we talking specifically about the finished goods or about the components? There's no clarity. If you take a look at the reality is a lot of fabric comes out of China. So would that be regarded as part of transshipment? We have no idea. So I think, which is why most of the brands and even the supply chain is still withholding any kind of assumptions, and we're just trying to soldier on and continue to keep the supply base open.
So as you're redistributing, how is this impacting costs for you guys first at the textile level and actually having to move your bases around?
Yes, there's always cost to that. But I think amongst all players in the market, Leverstyle being a multi-region player right from the beginning as a business model, that is something that we're very comfortable with dealing with. As part of the costing exercise, as part of the costing structuring, that moving of material around it will always be one of the first things we think about. I think the cost will always be there, but frankly speaking, with the high tariff in many of the regions in the foreseeable future, it will still be more economically meaningful to move around.
Do you think that this cost, you guys aren't going to bear this cost? Are you going to pass it on to the clients?
Yes. So, the tariff situation, frankly speaking, it will definitely be inflationary for the Western market, America especially. And ultimately, the bearer of this inflation will be the consumers. Right? And then what is the side effect of this is there will be a shrinking demand, inevitably. But one of the interesting effects is brands are beginning to realize that being overtly dependent on single regional production is not the solution. Right? And also being multi-region, the way Leverstyle is helping them do, will most likely be the thing to do in the future. And the other side effect of it is buying in bulk will not be as sustainable. Leverstyle has been advocating that for a long time. And some brands still see the need for a larger placement. But I think this particular shock is really pushing most of the brands, if they've not already adopted this idea, to be going sort of high mix, low volume, to be multi-region by nature.
Shed a little bit more light on how your clients, your customers are behaving. In terms of the orders, are they bigger, smaller, and what are they doing differently?
Okay, so the first thing first, immediately in the second quarter, there's a lot of front loading. Right, trying to sort of ship as much as they can during the holidays of tariff. But one of the things they realize is people are withholding decision. Unlike COVID, stores are opened. When stores are open, the stores need to be filled. So orders will come, but they're delaying the decision. And this delay of decision actually favors Leverstyle's service because, as everyone knows, people who follow us, we're a platform. We're not really a factory. We are a supply-based platform where we match 150 brands with 100 factories, and we have a mid-end where we do all the product development. So because of this, the development is not done in the factories that will be allocated. We can delay a lot more than most of the conventional suppliers. So this withholding of decision by brands in general means that Lever Style becomes a more natural partner for them. Yep.
I take note in your report that customers' credit concerns caused the group to intentionally ramp down business volumes with 2 of its 5 top customers. What is the health of the retail sector?
Okay, so I think we must understand that just before the tariff situation happened, the world, especially the Western market, is suffering a cost of living crisis for quite some time. Inflation, interest rates super high, fuel war in Ukraine and the Middle East, right? So this is really more than a double whammy. I think ultimately a lot of retailers are suffering, and so we have always taken a stance to we have this highly risk-averse mechanism behind us. We could foresee that brands that are not doing well, and we start managing down. It will continue. I can believe that brands will continue to be, some brands will continue to go into liquidation issue, but it doesn't mean that there are no brands that are growing. So keeping a multi-brand strategy, serving more than 150 brands, you'll see a portfolio effect. There will always, even brands that are in America with occasional hero products will still be on a growth path.
Now, we've known your chairman, Stanley Sito, for many years, a good friend of CNBC. I know that he's highly acquisitive. Since you guys became a listed company, have made 6 acquisitions, but the last one was back in 2023. Now, I also take note that you guys are highly optimistic of inorganic growth in the second half of this year. Are you able to make that?
Quietly confident.
What are you guys looking at?
So, talks are more frequent than before. Talks are more in-depth than before with our acquisition partners because of the crisis. The foreseeable future is shaky. We feel that there are few deals that are coming through that we are in deep into discussion about terms. We hope to have good news to announce in the near future. Nothing to report today, but we are, as I said, quietly optimistic.